Welcome to the replay of this week's WTF Wednesday. We're going live here, and we have been working with disaster financing for 9 months now. I could have had a baby. Okay, that's not going to happen, and I didn't, and I haven't, but I won't. But in 9 months, the SBA does not have their act together. And also, lenders are not super friendly to small businesses and how they're getting the money out. There was a CNBC article that says U.S. banks are swimming in money as deposits increase by $2 trillion. I'm reading this amid the coronavirus pandemic. We're going to talk about that when we come back, so hang out with us.
That's not to say there were not glitches, and there are still glitches happening.
Welcome to WTF Wednesday, where every week we talk about stupid that we've encountered that you should try to avoid. Welcome back, and today is going to be a little bit of a continuation of our rant, our spontaneous impromptu rant on Monday, where we lost our minds. So, Trevor,
I like how when we did the rant on Monday, I was totally already had lost my mind.
Yeah. When
the camera started rolling, and then if you watch the video on the replay, you can kind of see how Linda builds up, and then near the end of the video, there's an explosion of the scale here.
So we've been working with disaster financing and secured almost $3 million for small businesses to survive. And in the ensuing 9 months, we have not seen any progress that the SBA is understanding the dynamic of this crisis.
It's a very different type of disaster from the natural disaster for which the economic injury disaster loan was created over 60 years ago by Congress. And we are beating a dead horse here.
Yeah.
Yes, we have spoken about this ad nauseum, but it bears repeating, especially because this week we joined a new online forum on Facebook. And for those of you who are joining us from that Facebook group, welcome to the show.
Thank you for joining us.
Thanks for joining us. And
leave a comment, say hello, let us know where you're coming from, where you're hanging in
and
from.
Subscribe and hit the little ding, ding, ding bell. So
well, that's only on YouTube.
We saw some comments on that group, which back to back with a phone call I had with one of our traditional commercial lenders about a small QSR, which is a quick service restaurant type of business we're working on that is currently making money hand over fist.
Which is fantastic.
The lockdown here in Connecticut was released and they could reopen after a couple of weeks. They're making more money now, and our clients are buying this successful business. And the conversation I had with the bank was discouraging, disheartening, and every diss you can think of.
Well, let's just kind of share for viewers who aren't used to talking with us and hanging out with us. We've been doing WTF Wednesday since May 25th, and we do it every week live. And what we do, we talk about WTF moments, which we have seen daily. And the thing is now, like, there are businesses that they received their disaster financing, but now they're actually looking for financing
that's not disaster
related.
A line of credit to buy inventory. We're working on that transaction. That's actually approved. It's about to close. But I will tell you that we went through to get that through. And
can you be more specific on what that means? Yeah, what is that?
You have the phrase dot the I's and cross the T's. Just multiply that to the 30th power.
Well, the thing is, the people who have control, whether it's the process or the money, They're
Well,
not,
it's always the money.
and it's the money, but it's also the process and
The old
protocol
phrase we have in the mortgage
and
business,
procedure.
the old phrase in the mortgage business is, he who has the gold makes the rules.
I know, but the thing is that a lot of these people that have the control of the money are using outdated processes and outdated methodologies on how to assess the risk in a pandemic. I don't care if you've been an underwriter at a bank for 25 years, you've not been in a pandemic. You have not had this kind of experience. And they're doing stuff that is the same pre-COVID.
Essentially. Well,
I'm not
actually, they're not. I have to disagree with you, Linda. They're not doing things the same pre-COVID. What they're doing they're doing it worse. Thank you. Thanks. See, I teed that up for you. It's a disaster. It's a pandemic. It's an economic crisis. There is a reactive way to deal with this, but what's the quality of that reaction? Is that reaction a matter of, adapting to the circumstance and finding a way to actually lend money to people, or is it the opposite, which is finding a way to not lend money to people?
Yeah.
And by the way, that's what's happening right now. Yeah. Now, mind you, I lived through this already as a mortgage banker, 2007, 2008 through 2010. The global recession, the global meltdown, the subprime crisis. I lived through all of it. I've seen it before. And by the way, we found a way as a mortgage company to do loans. There was still, but we're finding that banks that are sitting on $2 trillion in deposits, with a T, not Trevor. See what I did there?
Yeah, I saw.
But sitting on two are just like hiding in a cave somewhere up in the mountains.
I just want to say hi to Michael, who's joining us from Twitter, because Twitter is my fave. Yeah, I mean, listen, the thing that we had, the rant we went on Monday, I mean, first of all, I hadn't even showered because there was a storm and the power was out.
Covering a lot of personal territory here, Linda.
And we went to our office.
Bathing, personal hygiene.
Doing
onomatopoeia?
Doing disaster financing for 9 months. We could have had a baby and more progress with the way things are going with banks and lenders and SBA. I mean, I don't know. Listen, you've been the banker, you've been the lender for 30 years. I've done underwriting, and I know how hard it is with how people are looking at, they're looking at how not to do the deal, because they don't want, it's a CYA
you mentioned before
thing.
About before COVID. I mean, traditionally, underwriters are always looking for ways to not do the deal and to not do the loan.
Yeah.
And your objective, whether you're a loan officer, the way I was at the mortgage company, or whether you're a financing broker, the way we are at Aurora Consulting, the objective is to overcome those objections that an underwriter has that they don't want to make, and overcome those objections. But what's happening right now is they are coming up with objections that literally just closes the vault and throws away the key.
Right. Now,
and small business, which is the backbone of the American economy, make no mistake, is not going to survive with this lending environment.
Well, I want to go back to what happened with Monday and what prompted that, because, the thing is, if we go back to when the pandemic first hit and then the lenders released some of the EIDL money and they released it.
Well, SBA
released it, and it was to big corporations, and they got hammered in the news on how big these corporations were, and they weren't just small business. But anyway, my point is this: it's still happening where no one is making the small business owner feel really good about that they're there to help, that there are resources to assist the clients that we've been working with. We get emails almost every day, like, what's going on? What's the update? What's the status? Is there any progress?
Is there a new stimulus package? What's happening with my reconsideration? Can I use the money this way? People on the Facebook group that we joined, people around the internet on different forums are having the same conversations and frustrations. Oh,
yeah.
You're buying me a beer. You know, we've said it again ad nauseum. Where is the guidance? This morning, I spent some considerable time taking an SBA EIDL loan agreement. I printed out a paper copy. Don't worry, I used the ink toner saver button, and I printed on both sides of paper to be, you know, environmentally conscious. But I printed it out, grabbed my yellow highlighter, and I went through important terms of the loan agreement, the note, and the security agreement.
Oh, so is this what
we can start updating our clients and all of you in our audience through our blogs and through our videos. Is
this the hazard insurance?
Well, I went through the whole agreement. We're going to be releasing content about the different aspects of this coming up. But so the reason I did that is because we're seeing no clear guidance from SBA. If you go to the SBA website, you're really not getting, you know, a granular type of instruction on important questions that people have. Most often of which is, hey, I got 22,000, but I'm finding that I really need more because my restaurant closed 3 times already because my state did a lockdown. Can I go back and ask for more money? So there's that question. There's the question about how can I use the monies, right? And there's so many other compliance issues where you have people who are receiving emails from SBA asking for hazard insurance.
Well, first you can go to our website that's here, and there is a page dedicated to SB. Right there. Right.
It's tough getting this camera thing lined
right
up.
there. Anyway, it's we have a page. It's under Let's Explore. It's the first option to where we on a consistent basis, we update with things that we find out, luckily, so that we could share with everyone. And the newest update was this morning. I posted about the Form 722.
Yes.
And we haven't done, I cut you off, but I know we haven't talked about the hazard insurance that the SBA is saying is required.
Well, you're the insurance broker. That's why I tossed it up to you. I'm drinking water over here. This is not vodka. I don't drink vodka.
So
I drink whiskey.
Well, it's only 11. It's not even noon. Okay.
You know, in Scotland, it's always 5 o'clock somewhere, my bonny lass.
So this is the newest BSWTF development. I guess the SBA is requiring hazard insurance for proof of hazard insurance. But the problem is, and you're going to be able to articulate this better, is that the EIDL loan isn't collateralized. So
below $25,000.
Okay, so then why do you need hazard insurance if there's no collateral against the loan? I mean, where's my sound effects?
More confusion.
Where's my sound effects?
To answer that question, which came up this morning while Linda and I were having coffee and working together in the office, we kind of did a deep dive, right? And that was one of the reasons I printed out the loan agreement and grabbed my highlighter pen. So what's interesting is we're seeing folks, our clients and folks we're seeing on the internet, who are getting requests from SBA for proof of hazard insurance. Now, mind you, this loan program has only been open since March 16th, which is not quite 9 months, right? The loan agreement, which should be your guiding principle, BTW FYI, G with the P, get with the program?
Yep.
So that's right. I got that right. Is the loan agreement for all of you EIDL borrowers is your guiding principle.
Yeah.
When in doubt, read your loan agreement. And that's why we're going to be kind of putting it into a bullet point format to help you understand some of your obligations and the terms. But going back,
I mean, because we don't want to be redundant to what the SBA is doing. Oh, wait, they're not doing that.
I see what you did there. That was impressive. I'm actually speechless.
Are you? Because can we?
No, I'm not.
Can we just savor this moment? It never happens. Wait, let's just have a moment.
Linda was so happy when I was sick here at the house with COVID for all those weeks. And she was off at another part of the house on her laptop putting together her Instagram for business owners class and putting it together. And I was miserable and in bed and horribly sick. And
he was so quiet. I knew he was fine. Listen, I'm not a complete bitch that I was caring about him being sick, but
you would put your head in the bedroom every once in a while and ask me to beta test your Instagram program. Not like, hey, do you want some more Gatorade?
I got you Gatorade and Tylenol. So
to be clear, my nephew picked up the Gatorade and Tylenol for us and
yes,
dropped
but
it off on the front
I
porch.
brought you food. See, he also had his appetite to some extent, so I knew we were okay. We knew the symptoms that would require hospitalization. That didn't happen. I knew in my gut of guts that he was going to be fine. So I just went ahead and did my thing of having the house to myself.
The hazard insurance clause that's in your loan agreement.
Oh,
right?
yes.
So it says you have to have this, but a couple of items about that. Number one, if the loan amount, an EIDL loan, is $25,000 or less, there is no collateral, and it says that in the loan agreement.
Mm-hmm.
Number two, many of our clients are now receiving letters from the SBA, which is an addendum. The letter is an addendum to the loan agreement, which states, this is a permanent amendment to the loan agreement, removing the collateral requirement for your loan.
Right.
So what we're seeing is that's on loans typically up to $150,000. So as Linda mentioned, if you have no collateral to secure, how are you required to get hazard insurance? But we're also seeing folks getting emails from SBA saying, hey, we need a copy of your hazard insurance as you're required to get. Well, first of all, the loan agreement says you don't need to provide that until 12
months after you've had the loan.
Because what the complaint we're seeing from people in these online forms is, wait a minute, how am I supposed to pay for this insurance when I can't even pay the salaries of my staff or bring product in the door so I can sell it? Or
this is what I'm talking about. Who's in charge?
Who's in charge is simple. The
Oh.
loan agreement is in charge. And if you educate yourself by reading the loan agreement
Mhm.
or by, once we post it, looking at our bullet point download of the key obligations that you have as a borrower and the terms required by SBA, that will help you understand. If you receive an email like that from SBA, you can push back and say, hey, listen, as per paragraph blah, blah, blah in the loan agreement, it says I don't need to provide you with this insurance unless I have collateral,
Right.
which you removed that on whatever date, cite the letter they sent you, and or it says 12 months, and I only took this loan out in July.
There's been the SBA agents, by the way, let's just, for those who have not been with, who have not, this is your first time watching. The SBA agents are outstanding. They're fantastic. It's no fault of their own that they've not received the guidance necessary from the top, from leadership, and they're just winging it. There are times where we're talking to somebody about a loan, and if something comes up with reconsideration, they don't have an answer because it's a different department, it's a different protocol, blah, blah, blah. And they don't have nothing they have nothing to look at. They can't even open up your account or your file or a database or anything. It's really ridiculous. Certain
circumstances. So the SBA agents, as Linda mentioned, are not really getting the guidance from the SBA administration upstairs. And that's why we're telling people rely on the loan agreement. This goes back to my experience in the mortgage industry or Linda's experience in the insurance industry. You know, if you had an insurance situation, you know, a tree, we heard this the other night from a friend of ours here in town. We had a wicked storm come through here Sunday night. We had no power for about 24 hours. And we heard trees cracking and coming down. So one of our neighbors had a tree or two come down, and he called his insurance agent to put a claim in, except the tree didn't hit the house.
Right.
So it's not a claim, right? But had he read his insurance policies, which is what you would have told him to do, right? Same with us.
No, I don't. I say, call me first. Hey, Adam. Hi.
So going back to the loan agreement, use that as your guiding principle, because we hear a lot of folks are calling the SBA.
Good. I'm glad
and the SBA agents are telling folks, you know, certain items of guidance, but actually in the note portion of your loan agreement, it says that you cannot rely on an oral representation by an SBA representative.
Yeah. So that's why they don't
read the loan agreement.
Mm-hmm.
Okay. But I want to bring us back to our WTF rant. The lenders who are sitting on $2 trillion in deposits, all that CARES Act money that people got, their stimulus checks at $1,200, their $600 unemployment, EIDL money went into the bank. It's sitting there. banks can lend that money out. They're not doing it.
And the SBA can't tell the banks how to lend the money.
Well, that's another, if it's an SBA loan, I actually called the SBA about an SBA loan we're working on, like not a disaster loan, a regular financing. And the SBA agent said, we cannot tell the banks how to lend the money.
Yeah.
So it's on the banks, and the banks are not reacting in a positive manner to this crisis. And the SBA is still relying on an esoteric interpretation of this disaster. It's not a wildfire that starts here and
or
finishes
a tornado
here, or a tornado. And, you know, it's 2 weeks, it's 2 days, it's 2 months. There's no timeline horizon on the pandemic.
So here's a challenge. Here's a challenge for when you're watching this. And if you've stuck it out with us to this long, if
I'm putting myself to sleep.
If you know a lender who is an underwriter at a bank who is in charge of loaning money, and you send them to businesses, and you send them this video for them to watch, and they have anything they want to challenge us on or discredit anything we're saying, I say bring it, because
we welcome it.
I need to know from someone who is not the people we've been dealing with that actually wants to loan money to small businesses. I want to know who they are. Please send them this video and say, these two knuckleheads are talking about you. Not about us. We're talking about lenders, not in a positive way, because we're not seeing that the money's leaving the bank.
I told you she was going to ramp herself
Sorry,
up to the
I
rant.
know. So please, I want to know what's going on.
Are you having hot flash?
I want some. Yes, always. I want some direct intel from those people that have control over the money, that understand what's going on with small businesses, where the disaster financing was not enough. Let me repeat that. The disaster financing wasn't enough. Why? Because the SBA decided to cap the loan amounts and also minimize the grant, contrary to what the CARES Act was originally, when it was enacted, and what it was originally intended for. They decided to give less money to the small businesses. And now there are banks that are not even giving money
on traditional type of loans.
All right. All right. I'm done.
So the other side of this is, because traditional lenders are absent from the scene and coming up with all kinds of massive obstacles to borrowers qualifying for a business line of credit, business credit card, or a business loan, whether it's to refinance debt, get working capital to help them maintain or expand their business, or to acquire a new business. Because lenders are absent, all the sharks are circling.
We didn't even get to that, WTF. I totally forgot about that.
Yeah.
Oh,
I'm there right now.
So explain what sharks is explain what that is.
Can you spell MCA?
Yeah.
You want to tell everybody what an MCA is?
Merchant cash advance.
You want to tell them how that works?
So
you're not going to like this.
It's not good, but let me tell you what again, I'm the neophyte with this duo here because he's the financing expert. But the MCA accounts are where, if you have a credit card terminal and every time you use the terminal, when someone buys your products or services, the lender, the MCA lender, they get it could be up to like 40%, right, of the payback. That they get the money first before
they get paid on the loan first.
Every time you're swiping that card to get to, have a client or a customer buying something from you.
The MCA loans are despicable, and all of the sharks are coming out of the woodwork. It's sharks woodwork. That doesn't really fit, but they are circling in the water, smelling blood.
Yep.
Because traditional lenders are absent, because Congress has not passed another stimulus package. WTF, Linda? Still no stimulus.
It's this compounding effect. When the small business owners can't get affordable capital, you're going to have these MCA, and they're going to be so desperate that they take it. And then it's this round and round we go. And no one is winning except for the MCA lenders. And I don't even know why they have to charge so much if they have the ability to lend.
Well, it's simple. I used to tell people when they were buying a house and they're getting a mortgage, risk is determined by the lender, and the higher the risk to the lender, the higher their interest rate is going to be.
All right, we got to wrap this up because I'm losing my mind.
The MCAs, it's not just MCAs. There's also a working capital product that goes off of the cash flow from your bank statements. We're calling that a journal entry type of financing.
Here's another challenge.
All right, calm down just a second.
Okay.
Let me finish the MCA. Take a deep breath. Breathe. Meditate. Breathe. The MCAs, the interest rates are astronomical. As Linda said, once you get an MCA loan, every time you run a credit card for a customer, they get paid right off the top.
First.
They take their money. And in the absence of other types of financing, the sharks are circling. Linda and I started Aurora Consulting in 2018.
December 2018.
Based on a conversation we had at our neighbors just across the road here, our new friends here. We just moved here 4 years ago to Roxbury, Connecticut, and the conversation. He was a business owner looking to buy another business. Blah 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 blah. Couldn't get approved from the bank for the amount he needed, and went out and got what's called hard money from a local attorney at a higher interest rate. And as we walked home that night in the dark on our country road here, I said to her, we can be a resource to folks like him, business owners like that, who don't think there are alternatives to the hard money and the horrible loans out there. There are alternatives, except right now there are not.
See, that's
our WTF rant for today.
Yeah. So anyway, there's really, the bottom line is that there's not great news, other than kudos to the frontline SBA agents who have to manage the incoming phone calls from people like wondering where is their money from the reconsideration request because they were denied. Because again, that's another WTF we won't get into, but just want to say thank you for tuning in with us today. And
can I do a little housekeeping? Is that okay?
Yeah.
Can I jump in? So Linda mentioned about the SBA agents. We've done videos on how to apply for a reconsideration,
how to talk to an SBA agent when you call them,
how to speak with an SBA agent when you call, and other aspects of the disaster financing process to give you kind of a short tutorial on how to prepare yourself for dealing with the SBA. Hopefully that will make your experience a more tranquil one in these very trying and anxiety-filled times. Please remember to subscribe down here below if you're watching this on YouTube, and hit the bell for notifications.
We have an entire playlist called Advancing with Financing that has been thus far dedicated to disaster financing. But it's also, we're going to start hopefully talking about other things that business owners could know or need to know, or possibly as we enlighten, when we become more familiar with some of the traditional financing.
Well, we're thinking of asking our friend Ilana Preuss to join us soon for one of our Wednesday videos. Ilana is a specialist in kind of Main Street development, especially with bringing small scale manufacturing to a Main Street concept. And she has been very successful in giving advice to municipalities all across the country, which when a Main Street area is redeveloped in that way, small businesses thrive and they're all interlocked. So we're hoping that Ilana can join us. We're going to talk about some other things in coming videos, advancing financing and WTF, about other aspects of maintaining and growing your business through and beyond the pandemic.
Well, and also because with the way things have been going with COVID, if business owners are not getting the kind of money they need to sustain and survive, forget about thriving. If they can't sustain, their credit is going to start taking a hit. Right. And so we just want to stay ahead of the curve with some of the things that you could be staying on top of, so that you're not in a desperate situation because of the way things have been going. And there are some things just as preventative. So we're going to,
if you want to watch both of us lose our brains in the rant, flip back through our playlist and look at the video we did 2 days ago.
It's on YouTube. It's live. It's on the live tab. And it was Monday. So
thank you all for joining us today.
Thank you so much. And we will see you next Wednesday.
I'm Trevor.
11:35. I'm Linda Ray.
And we are
Aurora Consulting, financing solutions, hopefully,
for your business success story.
Have a great day, everyone.
Safe.